Thank you. Thank you very much, guys. I appreciate the invitation to speak. And honestly, I've been saying it to everyone, and I'm going to say it to the group. I used to attend quite a bit of these functions, and thank you. I've never, I went in, and a lot of the functions were, "Hi, I'm a new guy in this industry. I'm a new gal in this industry. How do I start an LLC?" Or what's it? It's like, there's a lot of information that we would put out there, but I've never really took away a lot of information from this because it was more of the hard sell, trying to sell a product or get these new brokers to do this or buy this software or do that. And in this particular gathering, I've learned so much, and I am so grateful to be among so many smart people, everyone. I mean, there's so many different levels of experience and expertise and background, and I've learned a whole hell of a lot here, and I want to thank everyone, for sharing, so thank you. What I'm going to talk about today, well, first of all, this is me, Abby Shemesh. Everyone probably met my wife and also one of the partners of Amerinote, Molly Corson, and we will be talking about finding notes. How do you find notes? How do you take it from point A to point Z? How is this done? And I can talk very intelligently and specifically about the marketing tactics, follow-up. Well, we'll get into all of it. Let's talk about some of the topics. And topics. Thank you. And the topics we're going to be talking about, and please forgive me because I don't usually use PowerPoints. I'm one of those guys that kind of walks around and goes with the gut. So I'm going to do a little bit of both, so I might be a little all over the place. And then we'll kind of go over this, and I guess maybe open it up to some questions, towards the end or in the middle or whatever you guys want to do. But we're going to talk about foundations for success in the note trading space. There are three of them I kind of live by. Common sense tactics to stick out from the competition. I mean, a lot of you guys are going to see this and go, really? I mean, this a lot, and I'm telling you, a lot of people don't do what is common sense. And it really, I've closed many deals and got a lot of yeses because of mistakes, stupid mistakes of competitors. And I kind of, love it. Let them keep coming. You know what I mean? I say, I'm actually a little reluctant to tell you people. No. Finding buying opportunities when trading notes. This is, we touched on this with a couple of folks over the past day or so that we've been here, but we're going to go into an actual example, break down the numbers. I hope I got them right because I know a lot of you folks here will correct me if I'm wrong, and please do. Because sometimes, believe it or not, I'm not the best numbers guy. I can put the deal together. I go with the gut. It may not always be the best. That's why I love Dawn. I'm just going to say, when I first started talking to Dawn, she goes, "We're not going to even do the appraisal. This feels right." And I look at we're driving through Gilroy. And I got this smell of garlic and manure wafting through my car. And we're on our way down to San Diego. And I look at Molly, and she's on speaker. I go, "I love her." She wants to go with the gut. Not a lot of investors do that. I love it.
Let's just qualify that.
What that is?
That I was only coming in at one, there was 35% down, and I was only in at 1/3.
It was a hell of a deal. Yeah. But most investors would go, "Well, we need to do the BPO and this, and I need 5 weeks to close." What? So that's something you didn't do, and that's when I fell deeply in love. So these are the three topics that we're going to talk about, and let's get started. Okay, too far? Advertising strategy, foundations for success. Number one, advertising. How are you finding the notes? I mean, obviously, the gentleman, Doug, he said he doesn't advertise. He does a lot of word of mouth. Now, Doug sticks to Reno, so you can kind of do that, especially if there's a lot of opportunity. We operate, for the most part in all 50 states, and, we have to advertise our services so folks know who we are and what we can do. Industry and product knowledge. Now, there's not really a product other than you are selling money. That is what you're bringing to the table is funding. So that, in a sense, is product. And who do you take it to? What's their turnaround time? What kind of questions are they going to ask? What kind of yield are they looking for? Do they, make you pay for the fees, or do they cover fees? These are all things that you need to know. So when you're actually working, this is not going to happen instantly, but it's going to more along the lines come with experience. But for example, if you're a new buyer, broker, whatever, if you have a good investor behind you that can educate you, like, okay, you know, you got the lead, this is what you're going to need, this is what we're going to need to do, this is what you need to say to them. In a lot of cases, what I'll do is I'll say, look, Mr. New Note Broker, why don't you give me the information, I'll work an offer, I'll give you the offer, you'll take your commission out, and once you and I worked it out, I'll jump on the phone, you'll be on a three-way call, I'll go ahead, I'll help you with the sale, and then you can hear everything that I say so you can apply that to your own deals in the future so you can earn while you learn. And that gives the product knowledge, so when someone's like, well, I don't really know what to do, we got this. Let's just bring me the lead, let's get a good note, let's get a good offer, and then I'll show, take it to the next step. Don't boggle your mind with, oh my God, I need to know this, and this in order to even get started. Just get started. It's kind of like what you were saying earlier, Dawn, about I bought this mobile home and I had no idea what the next step was. That's not always recommended, but sometimes necessary. So we're going to talk a little bit about industry and product knowledge, and then, of course, my favorite, persistence. They never say no, or they never say yes on the first time, guys. They never say yes to I mean, if they do, it happens. It doesn't happen often. So persistence is what makes or breaks your ability to stick with it in the business, whether you're trading notes, whether you're buying notes, referring notes, whatever you want to call it. So advertising strategy. This is, I guess, the one that's everyone's mind. I mean, is everyone interested here in how you advertise, right? I would imagine. So we're going to get, these are general, 4-point, very general. But I'm going to elaborate verbally here. So hopefully if you guys, feel free if you do have questions about anything that I discussed, throw your hand up. I'll be more than happy to answer. Online advertising. This is my personal favorite, because it gets the sellers to come to us. I'm not, it's not like, oh, if I send a card out and then they call me and they go, well, I got your card. Yeah, it's going to be 50 cents on the dollar, Mr. Note Seller. Whoa, whoa, whoa. You came to me with this letter and now you're telling me you're going to offer me 50 cents on the dollar. I mean, it happens. It's not a life-changing position that you'll take if they come to you, you come to them. But for me personally, I find it easier. Online advertising. You have search engine optimization, you have pay-per-click advertising, you have Facebook paid ads, you have all kinds of different ways, and I'm sure there may be others that I'm not utilizing. My personal favorites, and because I know them, I've been doing them for over a decade, is search engine optimization and pay-per-click advertising. And the way that I would describe these two, well, what's the difference? Has anyone here heard of these terms? Yep. Everyone? Okay. Is anyone here actively using any one of these? Yep. Okay. So this is the way I look at it. Search engine optimization. Let's say that you want to eat. We all have to eat food, right? Well, what do? You're going to grow a garden. You're going to plant the seeds. You're going to wait for the seeds to grow and the fruit to grow, and then you pick the food and all that. That's going to take, what, 6, 12 months maybe to get the harvest? That doesn't really do you any good now if you're trying to eat today. What you can do, and I refer to it like this, so search engine optimization is like growing the garden. You plant the seeds, it takes time for that to grow and to snowball. And it's expensive, it could be expensive. I thankfully was involved in that industry when I first started at Amerinote, so I kind of did all of that myself, but we have to offload it eventually. Not to get too sidetracked, the other one called pay-per-click advertising. That's something where you can go on, and if you have your list of keywords and your ad placements and all that good stuff, you set up that account. It may take you a day, it may take you a week. You get Google to approve your ads. You attach a credit card, and literally, if everything was done right, the very next morning you can have 10 leads in your inbox. Literally. But you're paying through the nose for that. If you're doing it right, you can, get your costs down, but if you just type the word mortgage note or mortgage, there's sometimes it's with $30 a click I've seen. The average is about $7 a click. If you're really good or you have someone really good at what you're doing, you can get down to $2.32. I think that's where we were when we last used it, $2.32 or $3 a click, which is still very expensive, but you got to keep in mind your average commission is $2,500 to $5,000. That can cover your whole advertising budget for 1, maybe 2 months in some cases, if just closing one deal. So Online advertising strategies, again, search engine optimization, pay-per-click advertising. Facebook is a new one, extremely helpful. The problem with Facebook is the average note holder or note seller is 45 to 50 years or older, so the last thing they're going to do is go to Facebook to search for a note buyer. And a lot of advertising, from my experience, like, you're going to do a lot better for folks who are looking to come to the Property and Paper Summit. You know, you do an advertise. That's more the speed of a Facebook demographic where you're going through your feed and you're a real estate investor, you're clicking on real estate investing links all the time, and Facebook says, this algorithm says, this is a good placement for this person for Dawn's, seminar. It's not necessarily a great placement if you want to sell a note, because Facebook doesn't really, the note selling and note buying industry is really, really small. So I don't really advertise my product or my service on Facebook, but I will do brand awareness. I'll advertise my blog posts. I'll advertise other things that educational, it's not necessarily going to put money in my pocket, but it's going to get my name out there. So if they do sell a note, they go, oh, Marinote Exchange, right, I've seen that somewhere. And usually Facebook. So that's online advertising. Offline advertising, this is the more traditional, everyone's heard, the flyers, the courthouse leads, the postcards, anything that you're not doing online, you would be doing offline. Now, I started with the flyers and the letters and the postcards, and they work great if you have the time. It's 5 to 8 times that someone has to see your postcard or letter before they even consider it. And it's got to be pretty damn compelling for them to give you a call, because, quite frankly, a lot of calls that I get are, hi, I'm looking to sell a note, and I received this postcard in the mail. Well, the first thing they're going to do is they're going to go on Google, they're going to see who else buys notes. And if they come across me from your postcard, 9 times out of 10, you're never going to hear from them again, because I'm going to make sure I lock that deal down. I'm not going to let them go back to the postcard. I'm going to give them my best offer. I'm going to give them the best service. I'm going to give them the most attention. And hopefully, from my business perspective, a competitor will never hear or see from them again unless they follow up, only to say, yeah, well, I got this deal with this guy, Abby, and everything's going well. So I'm not saying postcards don't work. I'm just saying that it is fairly saturated, fairly saturated. There are other ways, like if you're doing a county record search, you're going to see a lot of this attorney or that construction company coming up that own deeds of trusts or mortgages. That's also a very good way to go. Now, you don't want to send a postcard to an LLC or some sort of private corporation that holds notes, because really they're just going to throw it away. You want to make sure that you are putting together letters and marketing material and something to wow that LLC, that business. So a business and an individual note holder need to be treated differently with offline marketing. It's highly recommended that if you're going to do postcards, you make them pretty compelling. I actually got a postcard, Mala, if you remember, it was a glossy, hard plastic postcard, and it had a perforate, like this, the things that you, perforated edges that you could rip off this coupon card. It was the most beautiful postcard I've ever seen. Probably very expensive, but if I would have received a postcard like that from a note seller, I would have most certainly called them back. There are postcards out there that can be very compelling. I personally, if you're on a very tight budget, what I would do, if you have the time, or if you have like interns or your spouse or your kids or whoever you want to have write a letter, you can type up a letter. I'm interested, I want to talk to you about your mortgage in so-and-so county. I'm very interested in learning more. I'm actually an investor, and I wanted to kind of bring you up to speed on a couple things. Signed, Dennis. And you sign with your real signature, not, you can print out the letter, sign with your real signature, then you take an envelope and you physically write out their name with a pen and address. You can put your little, your business address, in the corner. Some people don't even do a return address, or you could just put, Dennis so-and-so, blah, 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 and then a stamp. And if I got a letter like that, I would most certainly open it up. Who the heck is handwriting a letter to me? And then you see it's very personalized. You're going to get a much better response from a private note holder using that very rudimentary tactic than you would bringing out the Cadillacs of all, online or offline postcards and letters and marketing material. I can tell you that from experience. Unless something has significantly changed in the past 2 years, where because I don't really advertise offline with postcards anymore, just because we've kind of evolved, and I can elaborate on that a little bit. Yes?
Can you tell the difference between someone handwriting themselves or the machine?
Yes, I can. And I think that's a good question. You could do that. I also feel maybe 10, 5, 8, 6 years ago, it would have been like, wow, this is kind of cool. But I start getting all these things from Comcast now in the mail where they do them, and it kind of annoys me. So if I personally would see that, I would be like, nice try. You know what I mean? It's a lot of time, a lot of effort to do that. You don't necessarily have to handwrite the letter out because you want them to be able to read, especially if you have sloppy writing like me. You want to have them read it, but you sign everyone personally. You can even put my cell phone, my home phone, make it like, I'm giving you everything, man. I just want a call back. I'm not I'm not the IRS, I'm not a bank, I just want to bring you up to speed on what we can do for you. Just bring you up to speed. Keep it vague. You know what I mean? Like, who is it? What do they need to bring me up to speed on? You know what I mean? Don't use big words. You never know. You never know. It's just, it's serious. Like, I'm not saying that because you're going to be dealing with, folks that are of a less intelligent IQ. It's not that at all. You just don't want to scare them away with industry jargon up front. So that's offline, and I can elaborate on that a little bit more if anyone has any specific questions to marketing. I mean, there's a ton of information out there about postcard marketing and all that. I am not an expert. I'm an expert in the marketing of a note business, but I sometimes would have to bring on outside help to help me hone those strategies. But I can tell you that this for sure works. It's been working in our industry since the 70s or 60s or whatever. It's been working forever. So it's been working quite...
Abby,
Yes.
let me throw out this. What's your success rate with social media like Twitter or Instagram?
Well, we don't measure success by conversions. So a conversion to us would be someone fills out our long form on our website to sell a note. And I preferably like to see that come from a note holder or a note broker with some credentials, not what we call a joker broker. And I can get into that a little bit more. I'm sure everyone here knows joker brokers. But the success, what we use it for is engagement. We want to see how many times, I want people clicking, I want people sharing. Wow, hey Bob, you need to check this out. Amerino just did this blog post about how Equifax breach affects all Americans, and weren't you just talking about this? Or, we just put current events and we tie it into the note business somehow, and then we put that out on Facebook for engagement purposes only, not conversions, because we tried conversions, and the success rate was bupkis. I mean, it was nothing because people in that demographic don't go to Facebook to sell a note.
So when you put it on Facebook, it doesn't go very far unless you boost it. You guys
We boost it. I mean, that's what we do. We pay to have placement. I never really get viral ads because so you can do some. Do you guys ever see the ad on Facebook going around with the dog that talks about bacon? Anyone ever see this? No? Yeah, bacon. Okay, it's a really cute ad. He goes, oh, you got bacon? Yeah. And his lips are moving. Some guy did this. It looks like the dog is talking. It's the cutest thing I've ever seen. And I said to Molly when we were driving, I go, that would be a good ad for a Marinote. It would go viral. Like, you do something, you totally bite it. You totally copy it. Not that, but you do the idea. And you go, yeah, I just sold this note. I just got this payout from a Marinote. Yeah. And you do the whole thing. Well, why did, and just go through the whole process like they did there. And the cute, you wouldn't really know what the hell the ad's about, but the cuteness of the ad would maybe hopefully go viral, and then they would see my link and they go, well, who's a Marinote? I really wouldn't capture any leads from that because one really has nothing to do with the other, but if I really wanted to just do brand awareness, and if we were in an industry that was bigger than the note business, like the biggest mobile home dealer in Nevada, that's something I would do because we have a whole state to play with here. But this industry is very small and the demographic is not made for that yet. Now, in 10 years, as the population ages, Facebook matures, it may change. I think Facebook's going to be a very powerful tool for advertising in the future in the note business. I just think it needs to come into itself, as it has been with most other industries on that. Yes?
Just before you move on too far, on the direct mail thing, I've never done that either, but I'm considering doing it because I want to play more actively in my local market.
Yes.
So it's like, okay, I'm going to spread it everywhere, but I've never done it. So, that's where I've been going, well, I bought this list, and I really haven't pushed play, because I can't figure out, should I do a postcard? So, but, you can pull all this data that says you get your name, the date, do you get specific on, hey, you sold,
No.
you carried a note on this date for this property?
Nope.
You just say,
Unless they carry many notes. I say, hey, I'm interested in talking to you about your mortgage in, San Francisco County. Please give me a call. Here's my cell phone. I just want to bring you up to speed on a couple things. Literally, that's what I would put in there. That's it. I mean, vague.
People get freaked out if you know too much.
Yeah, you don't want to know. You don't want to say because,
yeah,
and
that is creepy.
and then they'll call you back, but they'll call you back pissed. Like, how the heck do you know all this information? Who the hell are you? Why are you sending me letters? Like, that's the last thing you want to start off. That's not the foot you want to start off on at all. That's not conducive to making money or earning people's trust. Not conducive. By the way, I want to also mention, if you're buying leads to send out, be careful. There's actually, if you do, Google mortgage note seller leads. About 3 or 4 down, it will say Experian.com. The credit bureau sells mortgage note leads. I would personally go to them directly and buy leads. There may be other companies that folks in our industry know. I'm not fully aware of those companies, but I do know that I've heard nightmare stories about people buying lists that have been sold 250,000 different times. And the guy's like, I'm getting the same, it costs note sellers. I'm on these damn lists. As soon as I sold my note, a week later, I'm getting all these. It's just brutal, Texas specifically. But if you're doing it in a localized area, it's a different story. People aren't targeting Reno, Carson City, or northwestern Nevada as much. Like a company like mine that would do that would blanket all the major metropolitan areas. You know what I mean? I don't know much. I mean, not me, but a nationwide company may not hone in on Carson City or something to that effect. Even Tahoe, they would want to, let's do San Francisco, San Jose, all the big players in all the surrounding suburbs, and that's where it's saturated. So just be careful who you buy lists from. I always recommend doing it yourself.
What was the name of the
Experian.com. If you just do a keyword mortgage note seller lead, you'll find the link for Experian, and they directly sell. I only say buy. I bought from them a couple times, and it was successful. I say buy from them because it's a well-known credit bureau. Now, we all learned in the past couple weeks that credit bureaus are more negligent than most of us, but that being said, there's still some brand awareness there where you're just going to Joe Schmo's lead factory. You don't want to do that where they have like a picture of some animation from 1990 on a website. You don't want that at all. So wanted to just add that. Media advertising. I didn't know much about this. This is more of a brand, mostly brand awareness. And I hired a company to do my search engine optimization, and I said, hey, actually the CEO brought me a note. He was a note seller, bought his note, and then one day he signed, I looked at his electronic signature, because on Google, sometimes the electronic signature is all the way down at the bottom. And I go, he's the CEO of a company, and I looked him up, and he's on MSNBC and CNBC. He's the thought speaker on the Facebook IPO. And I'm like, this is the guy I want running my SEO. And we started a very long, profitable relationship, and he said, look, we have this media blitz thing we can do for your company where we write a press release and we put it out to all our partners. And then all of a sudden they did that on a current event that tied in. Abby Shemesh is, we could talk to you about why you don't want to do a 40-year mortgage or whatever. And then all these podcasts and radio shows and news articles wanted to start quoting me and talking to me and this and that. Now, Amerinote's I got links on Realtor.com, Yahoo Finance for, nothing. I was paying them $3.95 extra to do this a month. And, we got backlinks now that puts our website, it's tremendous. Like, you can't call Realtor.com and say, hey, give me a backlink. They want some content in exchange, and it's been really helpful. So very simple. You can write the press release. It's always better if it looks like it's coming from a press person in your company. You don't want to be the guy who's the CEO and the janitor and the press guy and the guy who cleans the coffee machine. You don't want to have that. Even if that's the case, you don't want to telegraph that. You know what I mean? So we luckily hired this company as a third party to act as our agent in doing that, and it was very successful. and still is. So, we definitely recommend that. That's extremely inexpensive, especially if you're knowledgeable, which there's a lot of knowledge here in this room, in your specific niche. You can drive traffic to your phone number, to your website, to your email, or you could just, have the bragging rights that you've been on, Realtor.com or whatever. Who knows? Whatever your motivation is. This is one that I kind of learned from my sweetheart wife, which is it could be very, very effective. And it takes a little bit more orchestration, definitely more money than postcards. And this one I would recommend, this would be perfect for you, I think. Local area, you send letters out to people. You can do, I wouldn't really do handwritten. I do fancy letters. I like to cordially, I'm an investor. This is who I am. I'm a neighbor and a community person just like you in Carson City. And I wanted to invite you to Chili's on this day for free food, you and a guest. Come on in, let's talk about investment. I'm gonna give you some free advice. I wanna talk to you about how I can give you money. Come on in, I'm buying. And you do 10, maybe 12 people. And you take them to like anywhere. You can do a catered, like a buffet like we have here. You pay for a spread. You get these people, and you confirm everyone's a note owner. You go to the website or the county courthouse and you see, okay, Mr. Johnson, he started a note back in 2013. He's 4 years seasoned. It hasn't paid off. It's definitely secured by this property here. We do a search. We see there's no other liens. It's in the first position. You know you're targeting good people, so it takes a minute to get the targeting in place. You know what I mean? You get 10, 12, 15, 20, 30 people, however much money you want to spend. I say the wider the net you cast, the better. You get everyone into this buffet-style speaking area or Chili's or wherever. And while they're eating, you say, I just want to let you know, this is what I can do. I can pay this much for your note. We could do it this way. We could do it this way. Da, 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 da. I promise you, this will get wheels turning. This works. It's called a lunch and learn. And you're basically working. This does fall under offline advertising. But this is something that people in the note business are not doing. I promise you. I promise you, I promise you, I promise you. They're not doing this. And this is good for highly targeted local areas. Obviously, you're not going to do this in Texas unless you got it like that. I'm going to fly to Texas to go to Chili's and do this lunch and learn. And then I'm going to fly out and I'm going to go to North. It's not necessarily the most cost effective, but in a situation like what you were just referring to, I feel that they'd be perfect. And what are you out of pocket? $500 all in? Who cares? So that's the advertising strategy. That's just 4 of them. I'm sure there's others. I mean, maybe folks out here, have some other strategies.
Is there any reason why that wouldn't work if you're trying to buy investor property?
Anything. Molly does it. Molly, my wife, works in the tech industry in San Francisco, and she works in digital advertising. So when she wanted to get, I don't know, your clients, ad agencies or the big boy, this is what they do. Now they put the spread on, in the corporate realm, but you can adopt this tactic for investment properties, for notes, for CPAs, for realtors, mortgage brokers, mortgage bankers. It can be applied to anything if you have an educational service to transmit to your demographic base. You just want to make sure that you're not inviting, forgive the term, freeloaders. You want to make sure that they're not going to bring all 17 of their family members and extended family. You and one other person are invited to this. Somehow you guys figure out how you make sure that there's not, you figure out the details of it, but this is something that can easily be done in a local area. So that would be the advertising strategy.
Isn't that pretty common, like for guys that want to raise money? You guys that are raising
In the
money?
financial services.
Yeah, apply it to the sale of notes. Now, this way they put your name, the face with the voice. They see that you're a local person. I'm a family person.
You get a free copy of my book.
Yeah, here's a link. The EP, whatever. I mean, there's so many different ways. You can, if you really want to get crazy, you can even throw a little wine in there. That always loosens the wheels just a little bit. And then maybe instead of doing that as a lunch and learn, it would be called after lunch and learn or something, or before dinner and learn. Drink and learn. There it is.
Well, but you think
That's
it
trademark.
only takes one
Yeah.
out of the audience,
That's it.
right? So
That's it.
It's definitely a great
Yeah.
writing tool.
So we're going to move on to industry knowledge. Now, I'm going to get really detailed here. I'm going to refer to my notes, if you don't mind. So the sales pitch. I had an investor, I don't know if you guys know him, his name is Marty Granoff. Has anyone ever worked with Marty Granoff? Marty Granoff hates the time, every time I use the word sales pitch, he hates it. Why do you say sales pitch? It sounds like you're selling used Volvos. What? This is how I talk, I don't know. It's a sales pitch, you know, your presentation, whatever you want to call it. Broad term consists of two parts, sales pitch and the note buying process. Now, when you get on the phone with someone, I've closed, let's forget about closing. Because closing, there's different stages. You get them to remain interested, you get them to accept the offer or submit the docs for preliminary review. Every step is a win. Every step is a win because you can always lose them to the next guy, you know. Taking them to closing is the win, but in keeping them interested, you want to make sure that you have knowledge, you make them feel comfortable that you're in the right hands. For instance, you get all kinds of questions. I'm sure everyone can verify here that's been doing this for some time. There's certain questions that you know are the right questions to ask if you have a note investor, and there's certain questions that aren't the right questions to ask if you have a note investor. And for instance, I get note sellers, and the note seller would say, hey, what's the average discount? Well, why wouldn't I just, why don't I get the whole, why do I have to even give a discount? We kind of go into that. You need to have this information ready to go in a very intelligent way to be put. For instance, the discount comes into play because of time value money. That was the old spiel. It doesn't really work anymore because now you got to get into a whole time value money in a calculator session. I don't have time for that, and I'm sure you don't either. So, there's cost of capital, you have investment appetite, you have foreclosure laws in certain states. I'm going to pay more for a note in Texas than I will for a note in Florida, especially if it's delinquent. I'll pay, judicial foreclosure states are not my favorite. Now, there's some people that don't mind it and so forth and so on. I personally, my appetite and my investors and institutional investors tend to like the non-judicial, the deed of trust states. So when you have this information ready to go and you apply it in a way, I like to do it on the fly. I don't have this script. The worst when, I don't know if you guys ever had a job and they're like, no, just follow the script. The script is exactly what you need to say. It never worked for me. Every conversation is different. It's a fluid motion, but you have to have the same information in the back of your head so you know how to apply that information. It's almost like a dance. And, sales pitch. You're not just presenting a number. You're not just giving them a number. Money doesn't sell. I know the term money sells itself not in the discounted note industry because you're offering them less than what they're owed. You know what I mean? And then they want to know, well, how come you're not paying them for the interest that they're supposed to collect over the next 30 years? Because that's not how compounding interest works. It only works if you park the money overnight. It doesn't work if you bail, you know what I mean? But you got to explain to someone in a very nice way, not, have a chuckle at their expense at the same time. So that is, a big part of that. You also want to make sure that you tell them, this is why it comes into play. You have the loan characteristics, Mr. Note Seller. You have the borrower characteristics. You have the property characteristics. You have the state laws. You have all of this stuff. And they may all be fantastic. And your offer may be 97 cents on the dollar. And sometimes that has to happen in the institutional side because in such a highly competitive market where notes are trading at the highest I've seen, ever. I mean, I've been in it for about 11 years. I've never seen notes trade this high in value. And we're at the top of the search engine. So if anyone types in buy mortgage note buyer, sell mortgage note, trust deed buyer, my company will come up either in the first or second spot. So we're always getting the top of the top who are like, I got you in a horse race with 5 other guys, so I need the best offer. And it's like, well, hell's bells. This is not really what I wanted to do. But okay, and sometimes you gotta go with what you gotta go with. It's otherwise lose the sale. So you want to make sure that you have the ability to explain all the characteristics you need to know what you're looking for. And if you don't know how to do that, it's always good to have good investors behind you that can explain that. I have no problem saying, look, I'll jump on the call, you listen to me. That would be the quickest way. But if you really want to take the reins here, you need to write this bullet point, this bullet point, this bullet point, and I'll be on the call just in case you don't know the answer. I can chime in. So we kind of put training wheels on this with folks that are doing deals for the first time. Your currency as a new broker, and I think I have this in here, but it'll be the next slide. Your currency as a new broker or new finder is your lead generation. It's not how much you know or how awesome you are, what your old job, it doesn't matter. It matters about what kind of leads do you have now? Do you have them in front of you? Are they ready to sell? Do you have their attention? This is what gets investors' attention, in my opinion. You bring those leads. Even though you have no idea what to do with those leads, bring them. That is your currency. You're going to make an investor friend for life in most cases, So that's the sales pitch. We're going to go on to the note buying process. Now, once you get a note seller on the phone, and then you line them up for the sales pitch, how does one explain the note buying process if you never closed a deal before? Do you wing it? I mean, that's not really the best way to go. It would be fine for you to simply, not waste time and money and just do it the right way. For many people that have no intention of going down the road of winging it, learning the note buying process would be considered a necessity, and that's absolutely true. And the note buying process will depend on your investor. Dawn's note buying process is extremely different than a bank in most cases, or even a company like Amerifunds, which isn't a bank, but they might as well be with their note buying process. They do not, actually, they probably have a couple extra steps there. They don't make it easy in most cases. So the note buying process does change from investor to investor. That's why it's not uniformed like the mortgage lending side, where it's like, it's becoming more uniformed in documentation, but as far as the process of underwriting can be laxed between buyers. That's why it's very important to not, to get a good feel for a buyer, but it's okay. You don't need to know every single player in the industry. If you have one or two good players that know all the players in the industry, start making, I call it training wheels money with them, And then you expand out as your comfort grows, or you really start coming into the industry, you can identify where you see yourself in that placement. But like, I know if a new person came to Dawn, or myself, they say, well, I got this note and this guy's looking for 97 cents on the dollar and he's got 30% down with 5 years seasoning and he's got a 756 credit score. You know that you're not a good candidate for that. I'm not a good candidate for that because we're never going to be able to touch the offers that they're getting from FNAC or Grand Bank or whoever the hell else is out there, but you know where to take that. And you can say, look, Mr. New Note Broker, I know where to take this. We can both make a little money. You're going to learn your note buying process without having to pay $10,000 to go to a seminar in Colorado and pay it to Russ Dalby or whoever the hell is charging this, that, and the other thing. So there's ways to not have to pay money for education. You can actually make money with education. You need leads, and you need a good note investor behind you or a good note broker behind you that is...
Don't burn that relationship.
Don't burn that relationship. So quick.
Text them, don't call them,
They're
don't
so quick to burn the relationship inadvertently, and it's once you start saying I want to help you and this and that, then 9 o'clock at night you get a call on your cell phone. You're like, how the hell did you find my cell phone? Well, I went to Facebook and I looked up your brother and you got your number off the picture from your dog's collar on the thing, and I zoomed in and I saw the number and I'm like, what? We're done here. Don't ever call me again. So that will definitely be a non-starter for me personally. If there's space and there's the line right there. It's called 9 to 5, except for you guys, of course. So that's the note buying process. And again, I hope that I covered it. Does anyone have any questions about what we covered so far? Yes?
Who's the better buyer, the institutions or the small investors?
That depends. There's a lot of answers to that. It depends what you're selling.
What yields are they each buying at?
Well, so we're going to go into yield in this. No, but I'm going to answer your question. You're going to see, like you were saying yesterday, some of my investors want 7.75 yield. They're okay with that in some cases, right? Mostly now I see investors, institutionals going down. 10% yield is like, oh my God, they're charging us 10. They want a 10% yield. I see 5 and 6% yields now. First National gave me a 5.88% yield on it. It was a Calabasas, Los Angeles Calabasas note. It was a $2 million note with $800,000 down, and it had title issues. It had title deficiency issues. It's the craziest thing, and we still lost the offer because they had a private guy come in and say, "I'll pay you par," I don't know what his reasoning was for that, but he wasn't a note buyer. I can assure you that because we did all of our research on him once, because the note seller forwarded me information with this private investor's information all the way down at the bottom in his electronic signature. So I did the LexisNexis. I did it all. I figured out who the hell this guy was, and he was not a note buyer. So we lost it, but there's yields as low as 5.88. It's low. It's crazy. It's crazy. But the note was vanilla paper. I mean, it didn't get better than that as for an institutional investor that was looking for passive income, right? There was not a lot of a discount on the face value. So we're going to move on. Is there any other questions about this? Anyone? No?
Does anyone want to know who are the top institutional buyers out there? Because like, if you have one of those nuts, you want to,
Yeah.
well, you should go through Abby. Because
No, it's okay.
still-
Yeah, no. First, you guys are great. It's no secret. First National Acceptance Company is the largest institutional buyer of mortgage notes out there. They specialize in residential. They'll do commercial, but they'll only do partials. They'll buy bad credit notes. When I say bad credit, 580 or less. Now, that being said, it's great. All that sounds great, but once you try to get them on the phone and you get a hold of your 22-year-old account executive who can care less about whether you get the offer or not, or as long as they're out of there by 5 o'clock, you'll start seeing why you'll want to work with a company like mine, pay a little bit more or make a little bit less, learn a hell of a lot more, and have your client base, demographic base, whatever, start trusting you more because you're going to be more comfortable in your execution. They don't give you a lot of latitude to maneuver with execution because, again, it's a bank that occupies 8-story building. And they're great. I have a great relationship with them. I have cell phone numbers. I can call people at home, not presidents, but senior vice presidents of the bank. So I've been working with them for a long time, and that's why I would not recommend, unless you guys are up for it, you can go to them directly, or you can go to a company like Dawn or myself or whomever, and have a little bit of more luck. There's another buyer out there called Grand Bank. Unless you got about 90 days. Their average closing time is 90 days. It doesn't matter if it's a terrible loan, a great loan. 90 days. Mississippi. What's that?
Are they in Hattiesburg?
Damn it, I don't know. They're on Central Standard, I know that, not Eastern Standard. So they again, 6% yields, they'll do 90 cent on the dollar offers, and then they will be, as quick as they made you that offer, they're going to rescind it and give you a requote. Once you get everyone in, that's how they work. That's how institutions work, and that's why you need to know the note buying process. You need to know what you have, what to expect, what to look for. If you try to go at this alone, you're gonna stumble.
Are you going in with singles or pools?
These are one-offs. I'm not talking about pools. Yeah, one-offs. I'm not talking about.
Better, the pool better.
Well, I mean, a pool. A lot of people think, well, I can get this mortgage pool, and it's a $25 million UPB. I'm going to make $200,000, and I'm out. And I'm going to retire. Never happened. It doesn't work that way. So I've made more money on one-offs than I have on pools with 50 notes in them because institutional sellers do not give up spread. They don't, oh, I want to make 3 points. I remember, you get the contract. Everyone's, you need proof of funds and you need to sign this NDA. And in that NDA is a built-in 3% to this guy. There's no way that the bank is going to give me 3%, let alone you and me. You're lucky if you get 1/4% on a trade. And I get 1/4% on a trade of a pool, a portfolio, unless it's a private seller selling cash, CFDs. Thank you. Contract. I couldn't think of the term. Contract for Ds. So yes, I prefer one-offs because it's just my comfort. It's a really matter of preference.
2 questions. Do you work with McKinley?
No, and I don't. I work with the Reading office. McKinley. Last I heard, I don't know if this is true. I know they got a new website. It looks great. But last I heard, they weren't buying notes directly anymore. And even if they were, like Investors Financial is another one. I don't know if you guys heard of them. Eric Swanson. Great guy. They have a very well-to-do company. But everyone has to have a 680 credit score.
Right.
What the hell am I going to use you for that? You know what I mean?
So the second question then is, you said CFDs. First National doesn't buy CFDs. Do you have buyers?
No, they First National
They
does.
told us they don't. So I'm interested.
No, whoever told you that is mistaken.
I thought so.
22-year-old.
Now, what they need to do is they need to convert the CFD to a deed of trust and a mortgage before closing. That's what they'll need to do. So they're technically right in saying that. They forgot to follow through with the actual solution, and that's why folks like us come in, because you don't listen to. Sometimes you don't listen to them. You can't take everything they say. But you got to confirm and reconfirm. And by the way, Eric Swanson, if you're watching this, I'm sorry.
So you do FNAC, and then there's a marathon,
Amerifunds, Finac.
What's their process? Because I know some people love Finac like you, other people hate them with passion.
Yeah, I hate them with passion because they get bad information and they get requotes and they don't understand why. First National invited me out to their bank in about a little over a year ago, September 2016. They really roll out the red carpet for their brokers, especially if you're throwing them a lot of business, which we do. I mean, 75% of the stuff that we trade goes to Finac because it's mostly residential. Now, Amerifunds is another one out of Arizona. It's a fund where they have investor shareholders. Is that right?
I can't remember.
It's like, and I don't know if I'm saying that right, but they solicit, they say, hey, Mr. Investor, come invest with us and we'll guarantee you 8% or like a fund. And they're very strict. They got a lot of paperwork. The reason I like Amerifunds is because they do offer high amounts that they very rarely requote unless you don't know what you're doing and you don't see the potential disasters down the road. And it's a very small crew, so I can get Vanessa on the phone or Tracy on the phone. Vanessa's the quote gal and the director, and Tracy's the gal that does the processing and the underwriting. I can get them on the phone pretty quickly, no fuss, no muss. I love that. That's a big plus for me. So they get all of my commercial business for the most part, them and a couple others.
Can you describe how you compensate? Is it flat or is it
How I get compensated?
part of the yield?
No, we can get into that, but it's a flat. Usually what we'll do is we'll buy and then we'll flip, that kind of thing, or in some cases we will buy and receive some sort of trading fee or something to that effect. So, but that's, that can vary between states, and I'm not going to say I'm not an expert, nor am I licensed anything. I'm a regular investor that buys notes.
So your model is buy and then resell?
That's correct.
Because then you don't need the licensing.
That's correct.
You're the investor.
That's correct. And I'm in absolutely correct. So, and we collected fees before Dodd-Frank and all that. There was a lot more, again, latitude. We've made our fees, we've made our little investment pile, and now we're making that money work. And that's really the gist of it, the long and the short in a nutshell. But we're going to move on to persistence, the art of professional persistence, polite follow-up, not badgering the note seller. I feel like I have a good feel for folks where I could talk on the phone. I know where they're coming from. My spidey sense is good, I feel. I'm going to pat myself on the back because I do have a good spidey sense, if anyone's a comic book fan like myself. So we have, the art of professional persistence is you get the note offer, you send it out. You always send it out in writing, and we're going to get into all that. What do? Do you wait for them to call you back? 9 times out of 10, they're not going to call you back. You got to follow up with them. I give them 72 business hours before I call them back. If I put a quote out on Thursday, I call them back on Tuesday. If I put a quote out on Tuesday, I call them back on Thursday or Friday. Fridays, you don't always catch them. And I definitely don't call at dinner time. And if I do happen to call at dinner time, I will say, hi, Mrs. Note Seller. I am so sorry to bother you at dinner. I'm in California and you're in Virginia. But I just wanted to let you know I have another deal that I'm working on, and we're currently holding your funds in a reserve account from the offer we made. I just want to know what you're feeling. What are your thoughts here? Should I move the money out of the account and are you thinking about maybe down the road, or should I leave it there because you're still thinking about it? What do you say? It always works. It always works. You don't badger them. Just give it to them like a real person. If you want me to remove the reserve, hold off the funds, you can always come back to us. We'll figure out a way. Even if I have to pull it out of my advertising budget, I will make sure I get you this money for this. Say what you got to say, but do it politely and do it within legal and ethical boundaries. Follow up even after you get a no. Again, this comes back to the spidey sense thing. You can tell, right, folks, about the questions that a note seller asks, if they're serious or not, what level. Like, for instance, if someone contacts me and go, I have the pay history, I have the borrower estoppel, I have the blah, 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 and I'm like, well, this guy was in a transaction with someone that fell out. If he's got a loan payer estoppel and he's got pay history, they don't, a new note seller will say, what's a note look like? I don't even know, what's this? So just by talking to them the first 30 seconds at what point of the process they're in, where their mind is. And a confused mind will always say no. So if you tell them, I'm going to offer you 72 cents on the dollar for a note that you're owed this amount on, and don't give them an explanation why, they're going to say no. and then you just wait in silence. This is not the boiler room where you sit there and you make a stock quote and then you hold the phone up and whoever speaks first wins or loses. It's not that. You need to hold their hand and get them to, it's okay. You know, look, if you say no, it's fine. And if you say yes, or if you say no now, it's fine. We'll revisit this. You sleep on it. You know, all I ask is that you give me the opportunity when you are really to make a decision, because I'm a direct note buyer, and I promise you, you won't be disappointed. And then I'll even give you references. I mean, I go above and beyond. But I don't do it in a way that is braggy or no class. Does that make sense? Okay. That's following up even after you get a no. Know when to accept a no. So again, I've made this mistake, and I'm not that good at this, to be honest with you, because I have people on my, I use Google Calendar to do all my follow-ups. I use it like I don't know if anyone's familiar with Salesforce. What's it called? The CRM, Customer Relations Management System. I use Google Calendar. It's free, it's easy, you know, reminders, this, that. I have people that I have on my Google Calendar from 2014 that have said no, that I'm still following up with every 6 months. Hey, you got that note? Because I know their equity was terrible. I know that they weren't collecting payments. They were collecting payments in cash. You can't sell a note if you're collecting payments in cash, and then you put that cash in your pocket, you go buy groceries, you put gas in your car. The note won't be sold in most cases for top dollar. For top dollar, we'll say. So, oh, I know they were collecting cash. Let's see if they have a good pay history now. I've been following up. Some numbers are disconnected. I got one guy who's like, oh, you didn't hear he passed. I'm sorry. Like, you know, need to take him off the list. So there's, you know, there's a lot of reasons, but sometimes you need to know when to take a no, and usually I don't know when to take a no until they actually hang up on me. And I know it happens, like, hey, you know, I'm not interested. I told you I'll call you when I'm ready. Thank you very much. Click. It's not like a hard hang up. It's a thank you and then a hang up, you know, usually. So you got to know when to accept a no. Even if you accept a no, I would always do a 12-month reminder call. Hi, this is Abby from Amerinote. We spoke about this last year. You don't remind them that they manhandled you in the conversation. You say, hey, we spoke about your note. It really wasn't a great time for you. We just got a new infusion of capital, so cheap. We just wanted to know where you're at, because really we're looking to put this money to work, and you're at the top of the list, or one of the people at the top of the list. What do you say? You want to give it another round? Can we get you an updated quote? Not only would you sell us the note, let us get you an updated quote. Sure, why not? That's a win. Let's submit the quote. Okay, you need paperwork for this new quote? Okay, that's another win. And you keep getting little wins, but you can't, it's just, you're going for the little wins on stuff like that. So again, everyone is a win. It's not, oh, this is another oh, come on, when do I get paid? You know, it's not like that. Everyone's a win. Always set up a reminder 12 months, even if it's a hard no, unless there's like profanity or talk about your mother or their mother or whatever. It's safe to say, God bless her, he just needs the truth. It's safe to say that that's a pretty, you should probably not call them back.
Or if you're really bored.
If you're really bored. I've done it. I'm not going to say I haven't. So, yeah. There was one, I don't know if anyone's familiar with Nick DeCaro and Associates. He's a broker. Anyway, Nick and I have done some deals together, and he's funny guy. We're friends, telephone friends. And he's like, Abby, I'm going away, my wife, 2 months. Can you do my leads? You have 50%. And he has some other leads that I got 3 months ago. I've never even called them. He just lets leads come in. God bless his soul. He lets leads come in, and they just sit there because he has no follow through. He knows how to get the leads there, but he doesn't know how to keep the leads there, you know? And I contact this woman. I go, hi, I'm associate of Nick's. I'm an investor partner. He's out of town. He asked me to follow up with you. And she goes, drop dead and lose my number. That was her response in email. That's a hard no, guys. And it wasn't even my lead. It wasn't my lead. So I'm not lying. I can pull it up and put it up on the screen if you don't believe me. So know when to accept a no, and we're going to move on to the next slide. Take that.
Did you take it as a no?
Is that the right one? Yeah. Okay, so common sense tactics on how to stick out from your competition. You guys are going to love this. Putting all of your note offers in writing when you make an offer to the note seller. I swear on my wife's life, that I come across this all the time, where people, like, I get a lot of brokers. I send them this elaborate offer with all this information. All they literally need to do is forward it, change some of the numbers, and forward it out, and they would look like rock stars. Instead, they call the person, they give them the verbal information, they hang up, and then they sit there and they go, how come I can't get notes done? What the hell am I doing wrong? And did you put respond? Did you have the email? Send me the email. What did you put in writing? Oh, I didn't send them an email in writing. What? Seriously, like if you were getting services from someone on like anything, and they just gave it to you over the phone, I mean, I personally like to see something in writing, something. And even then, even if I didn't like to see something in writing, suppose I changed my mind 4 months from now, and I'm like, hey, that guy Abby was awesome, but how the heck do I get a hold of him? It happens all the time. Real simple, man. Put your emails in writing. What I like to do is I like to include all of my credentials, which is our Better Business Bureau accreditation. I also put, this is all on the bottom, so I'll put the offer. Underneath the offer, I will put the next step, promissory note, deed of trust, HUD-1. That's the documents you need to fax or email to us if you're interested in exploring the next step. No commitment, if you just want to get to the next step. I just need to read the wording in the document, make sure there's no special clauses. Let's see if it's a good fit for both parties. Easy peasy, no commitment. Let's just take the step together. They send that, and then the next step is underwriting processing, and then underneath that I put average turnaround time. Residential, 15 to 21 business days, so forth and so on. And then underneath that we put about us. All of our information about links on our website. Our Marinote mention on Yahoo Answers, Google reviews, Yahoo reviews, Yelp reviews, all links. Underneath that, Better Business Bureau accreditation. Underneath that, learn how to sell, mortgage note for top dollar, and I have a link to my website. All they need to do is just scroll down, and they can press links, and then it'll take them to web pages that will give them all the information they need about us. We try to make it as easy as possible for them. You don't necessarily have to do this. Other people, what they do is they'll send an email saying, hey, Mr. Note Seller, take a look at the PDF, it's attached. And then they have this beautiful letter of intent. That's another great way to do it. I personally like the links and the emails because it's just a good fit for me. I like it. I mean, I love, and McKinley does that. Who was asking about McKinley? So McKinley does that. When they do note offers, they put the offers in this beautiful PDF. I mean, that's the one positive thing I can say about McKinley, is that they have beautiful note offers. I don't want to kill them, but.
Do you have any automation systems for your note offers?
No. Yeah, honestly, I had to switch business emails because I was, for the longest time, don't laugh at me, I was using Yahoo Business Email Services because I started this in 2005 when Yahoo was, the top of the game. And their search function was my filing system. When I put in a note offer, I put in Reno, Nevada -bid request. That bid request goes to the investor. No, Reno, Nevada, no purchase offer. I know that goes to the seller. Full submission package is when I have all the deal and I full submission to the investor for underwriting. Title request order, like I label them specifically, or I'll put, nowadays what I do, because we have so many in these email file, I'll put an address with it. So I just pop the address in and all the emails and all the attachments for that address come up. And I had to switch because Yahoo was getting hacked and it was affecting everything. So I switched recently to Google, Gmail, G Suite. And Google search function is amazing. So we don't have that problem anymore. Now, in conjunction with Google G Suite and Google Calendar, it's beautiful. It's a beautiful thing.
They have an automated system for them to put their info.
No, I would love that. Salesforce has stuff like that, though.
So when they go in to put their information about their note.
Oh, a submission. Are you talking about an intake form?
No, not really.
You're just talking about for organization purposes.
Yeah, Podio might be a good application for you.
What's it called?
Podio.
Podio. Yeah.
Podio's
Oh,
awesome.
Is it?
Yeah.
Yeah.
Awesome.
That's
It'll integrate in with Active Campaign and other stuff.
Oh, nice. Yeah.
So,
Excellent.
They're owned by Citrix.
Yeah. Sure. Well, I appreciate that. Thank you, Walter. Thank you, guys. Yeah, that's good to know. So where were we? Okay. Follow up, and more follow up. This is, I think we kind of touched on this, polite persistence. Deals get closed with follow-up, man. If you don't get a hold of someone, it takes me sometimes 6 weeks to get the person on the phone or a response, and that's normal. You kind of move on. You don't get too emotional, but you keep that right there in your over here in your periphery vision. You just kind of keep that there. they will come around. And if they don't, you set up a 12-month reminder. You let the jets cool, and then you circle back around, pop out, and hey, how you doing? And you catch them off guard. And I say that in the nicest way possible. You just make sure that you get their attention and get in front of them in a way that allows you to present yourself in a very professional manner that will be conducive to making money in the note business. So,
Quick question, Abby.
Yes.
And I know we're at lunchtime, so is this good though?
Yeah.
We have-
Let's finish up.
yeah,
But what do you think about, do you use any autoresponders once they fill out your form?
yes, yes.
And what's your opinion on how that goes? Because like, I'll just set it up for, this much weeks, then it gets longer, then longer, then longer, and it's an automated response. Hey, do you still have that notice?
Oh, no, I don't do an auto. I only do autorespond. No, everything's manual. I only do autoresponder if
And
they.
what do you think? Do you think that's another sort of like root thing?
It could be. I never really touched on it. I'm a control freak. Molly will vouch for that. So I personally like to be in.
All through your Google thing.
Yeah, I just do it. I follow up, and sometimes a follow up. I mean, in all honesty, sometimes I get done work at 1 o'clock in the afternoon because there's not a lot of follow up, and that's exactly why I got in the note business, so I can get done at 1 o'clock in the afternoon. Just FYI. So it happens.
Personal too, when you send that email.
What's that?
It's more personal.
Yeah, it's more
The
personal.
way that you do that, I'm like, probably my autoresponder thing is probably pissing people off because it's more.
It would piss me off.
Yeah.
I mean, I'm just saying. Yeah, personalization is really missing in this industry, and education and know-how. We're going to speed through this because I have something really special for you guys at the end. Well, let's move on, but it's something special I want to kind of get out before we go to lunch. Knowing your product and sharpening your pitch. We kind of touched on this. I wanted to repeat it again because it's so very important. Again, you can get this information from a good note broker, buyer, investor. Make sure that you have the leads ready to go. The leads are your currency, and guess what? Huh. Is it not there? I guess maybe I took it out. Anyway, the leads are your currency. Moving on. Finding buying opportunities when brokering notes. Now, this is where you can really make some significant money. Walter, Kathy, Quincy, anyone else who's good with the numbers, like off the bat, if my numbers are wrong, please go easy on me. Not like yesterday, like Patty. I'll just have to hide under this table here. So we're going to use a real example. And this is what Dennis and I were talking about the first night we were here. And this is how it goes. We have a $55,000 sale price. This is a note that comes across our desk. $55,000 sale price, 11,000 down, which is a 20% payment, 6% interest over 30 years. Now keep in mind, this tactic only works with long AM notes. It doesn't work with balloons. It doesn't work with notes. I wouldn't even go under 25 or 22 years. It may work with a 20-year note, but it's got to be over 20 years. 30 years are the most ideal for this. When you get a note submission on a 30-year note, even if it has good characteristics like this one, they're like, well, why the hell am I paying a discount? Why is the discount so great? Because it's 30 years for return on investment here, Mr. Note Seller. 30 years is a heck of a long time to wait for return on investment. So the discount is going to come. That discount eats away at your it eats away. So sell a portion, retain a portion, or we can do this. 360 months, $263.80 is the monthly principal and interest payments. I'm not talking about taxes and insurance. I'm just talking about P&I. There was 9 payments made. We got 351 remaining. So a good amount of payments left. 29 years and 3 months, whatever. You get an offer from an institutional investor for $21,742.79 on 120 monthly payments. Sorry, Don. For 120 monthly payments, that is something like a 5 or 6 or 7% yield. That is the key to this, is finding an institutional investor who will buy a big partial. You get the biggest partial you can find with the lowest yield that you can find. It's not, as long as you can get the numbers work, don't focus too heavily, oh, this yield is not good enough. You just want to get a partial. Like, this is the remaining balance, right? So you have a remaining balance of $43,597.82. I should have put that there, sorry. They're offering to pay you $21,742.79 for 10 years. Though that gives you $21,742. Now what you could do is you could take $4,000 out for yourself, pass on the net proceeds to the seller, and offer that to him as a partial offer. That's something you definitely should do. Because when I give offers, I give two offers. I give a full and I give a partial, unless they ask for split partials or, and then we can start thinking out of the box like we started doing yesterday if you really have a unique situation. But pretty much, on the regular, I'll do a regular partial and a full. You can then say, wait a second, I have $10,000. Now, I want to preface this by saying, you can't just have $10,000 to do this. You have to have, with most investors, you have to have the full buyout amount, and I'll get into that. But you could say, well, I can buy 231 payments here, throw up $7,000, $8,000, $10,000 of my own money, and then come in on a full. And there's a way to split that up. And there's a way to document that properly, because you're buying, like we were talking about yesterday, you're buying the first half and then buying the tail end. So now you come to them with 21,742.79. You add your 10 in. It could be 7, whatever. You give them a partial purchase at, let's just say, 19,742 or 18 or 1742, whatever you take out for yourself, and then you give a full purchase offer of 31,742.79. That's 73 cents on the dollar. That's not bad for a 30-year note, and you're sure as heck not going to get that from any other note investor. You're usually going to see offers around 65, 62 cents on the dollar, 68 cents on the dollar. So even if they shop, there's no one else giving them this deal but you. So it's a good thing. Now, in order to get how much are you giving? What's the percentage? And I put this down here for the newer folks. In order to get the percentage of how many cents on the dollar you're doing, you take your offer first, the full purchase offer, and you divide it by the remaining balance. It came out to 72.8. We round that up to 73 cents on the dollar. That's how you get how many cents on the dollar you're offering. You take your offer and you divide it by the balance, the current balance. You don't do it in reverse. You don't do the balance first and then the offer. You will get the wrong answer. So offer first, smaller number first. For $10,000, you just purchased 231 future payments, putting 32.4433447611% yield in your pocket by taking $10,000 out. Now, the trick here is you can't just say, oh, I'm going to put my $10,000 into an escrow account. So and here's the best part. I forgot the best part. You don't have to underwrite a thing. You don't have to pay for an appraisal. You don't have to pay for it if you go to the right buyer. I'll go to a place like First National or Grand Bank, or well, not necessarily Grand Bank, but other companies that don't charge brokers for the fee. Let them pay for the appraisal. Let them pay for title. You know you're getting a clean deal because you're seeing their underwriting results. You don't even have to underwrite it. So you have no underwriting costs in there whatsoever. The cost that you will have is that you're going to have this amount, $31,742.79, in your account. You're going to need to take that full purchase offer. You're going to need to put that into the escrow account at closing, or however you decide to close. And then that same day, your institutional investor will put their $21,742 into that same account. You fund the seller the 31 and change, and then you get paid. You reimburse yourself the $21,742 all in that same day, or within a couple business days, whatever. So you're just putting money in this account and then you're taking it back out. An investor usually won't say, I'm not going to let you, because this is where they make their money, man. That's really where they're going to make their money. They're not going to make it easy for you to stick your hand in their pocket and pull out their profits. They're going to want to make sure that you have your own capital to do that. And there's companies out there that will let you do that. There's other companies that frown upon it. And there's some companies that will give you a hard time about it, but it works. It happens. It's not every deal, but when you get a deal coming across your desk that are over 300 payments is my threshold. You can go 240, which is 20 years or more. Remaining, this is a good tactic. Yes?
So when you do this, does your institutional investor that's doing the...
Oh, they know.
You gotta let them know.
Oh, I have to let them
They
know,
to be on board
because the
with it.
documentation has to line up, and
Right.
First
They're
National,
aware of it.
yeah, they'll do it, but they're not happy about it, because that's what they're planning on doing, is what they're hoping for, because in average, every 10 to 15 years, I'm sure you guys can vouch for this, the average person in most areas of the country either refinance or sell. So you're going to get a big fat payoff check one day, 7, 10, 12 years down the road, or you're going to start collecting payments. Either way, you got some sort of retirement coming in because you're now attached to this property. So if it gets, all the good, the bad, and the ugly. So if it gets paid off, great. If the payments come to you, great. If there's an issue, you're paid off. You're notified. And then on the flip side, if there's a foreclosure, there's, problems there too. So you want to make sure that you have, your LTV right, your ITV, whatever you need to figure out, which there's plenty of information. Yes?
If, when you're structuring these deals, and if you're taking somebody's retirement money, do you make sure that they have a cushion to pay for the foreclosure?
If I'm taking someone's retirement
If
money?
you're taking somebody's retirement money to buy the partial.
Are you leveraging other people?
No, this is my own money.
It's your own money.
Yeah, my own money. I'm not that, I'll be honest, I am not that sophisticated.
Okay.
In the sense that, what's that?
You will be.
When you get done with me, I hope so. But I'm not that sophisticated. That's why I'm here. That's what I said earlier. I learned a lot. I am, as you said, I know people that are maybe entrepreneurs, millionaires, this and that, and then you start opening pulling the wires apart and going, how the hell did you ever survive? How are you so rich? That's, not the rich part, but that's, where we're at. You know what I mean? Like, I don't know. So
Okay.
I'm here to, maybe you can help me with that.
We can talk about
Yeah.
Question two,
What's that?
so if that did go in foreclosure and
Yes.
got foreclosed on.
Yes.
How does that get split up? Do you end up with a tenant in common property? Does the first person pay the second position? How all does that fit together?
I got to be honest with you, and I'm not afraid to say, I'm not going to say I don't know because I do know it varies. It varies between states and situations, but in most cases, you are at risk for that. I mean, there's a risk there. You may not get paid. It depends on the market. It depends on a lot of variables. I mean,
Let's say there's enough equity to cover that loan.
and you're going to,
So how would that split
So
up?
it-
How would it work?
in the foreclosure situation, I know, Dawn, you always say, and I'm looking to you because I deal a lot in vanilla paper, not vanilla, but like, performing, we do non-performing, but we don't do a lot of foreclosure. So in some states, you may not get that property back. It may go to auction. But in most cases, if there's equity there, you're going to retain some or all or more of your investment. If you did the numbers correctly, if you identified what you have, the comps, like for instance, if you're doing an area like,
Should I give you an example?
please,
Okay.
you see me flapping up here?
So let's just say that
Bring it up.
he uses Ohio. Ohio minimum bid in Ohio foreclosure is 66% of the appraised value is minimum opening bid during the foreclosure sale. So pretty much of your investment is already protected. So he did that when he actually structured this deal unknowingly that he did that. So, so with that being said, how I would do it is that I would factor in the payments that you had already received through the course of the deal. Okay? So this is what you got and this is your balance that's left. We take the foreclosure sale, let's do $100,000. That's the value that the sheriff is going to appraise the property because it's appreciated. $66,000 is the minimum bid. It goes for the $66,000. You're covered.
Right.
Simple math.
Yeah, but I don't think you guys are understanding my question.
Well,
So
remember the two amortizations we did last night?
Mhm.
It's already predetermined by that.
Exhibit A, Exhibit A,
I
Exhibit B.
don't think you guys are understanding my question.
Okay,
Okay.
so let us listen.
So it went through foreclosure,
Uh-huh.
nobody bid,
Nobody bid.
Ah.
and we, the lender, now have it.
Okay.
How does the title fall out? Do I own a?
It depends what it was foreclosed on, right?
Do I own a tenant in common interest with?
So if it reverts back to you, you're the bank, right? So
And there's two of us
if
involved.
there's two of you involved.
Right, and I didn't get the tail end yet, you know
He
what I mean?
hasn't gotten the tail end.
Right.
So we would still take into factor the payments that you've received
Uh-huh.
on the investment. Probably you would own it together and you would agree to sell it or rent it.
There it is.
Okay, that
That's
was my
what you-
question.
Yeah.
The
Yeah,
title person.
that forces you into it.
Right.
Absolutely.
But it keeps him connected on the back end.
Right.
To make sure
Right.
that you're protected because he doesn't want to lose his back end.
Absolutely.
So you have your new BFF that you own.
And it's funny, you want to make sure you're getting, excuse the term, but getting into bed with someone that you get along with. And that, so I'm comfortable with the partner I would take on here. And another partner would be like, I would be blindly comfortable with Dawn. Or any one of the wonderful folks I met here. So, but if I'm dealing with, some 22-year-old kid who's just giving me, oh, sure, we can, do that, I would think twice, you know what I mean? I'm sorry, Mr. No Seller, I can just offer you a partial, you know what I mean? So that's my presentation, guys. I thank you so much.